I think we may be seeing that now. The rally in gold and silver recently didn't really do much to help those miners. And that's probably because there was supply right above the market being offered into it. So there are redemptions in the market right now. The redemption should end by December 31st. Time to start picking your spots if you're looking for an entry for a 10-year hold. So if you're a short bullion player, you're losing money this year. If you're a long mining player, you're losing money this year.
As we approach the end of 2023, the gold price is about $100 higher, while silver is lower by about $2. Yet the mining shares had experienced another year of declines, with many of the mining stock indices trading even lower than when gold was at $1,650 and silver was at $18 at the bottom of last year's sell-off. VinceLanci has keenly observed the cyclical nature of silver and junior mining stocks over the years. The current situation is marked by silver establishing a higher low, in contrast to the Silver Junior Miners ETF, which finds itself at a new low. Silver is currently testing the 38.2% retracement level of the larger 2021 and 2022 decline. Delving into company specifics, first Majestic Silver Corporation, owner of the Jerritt Canyon property in Elko County, reported an adjusted net loss of $10.93 million in the third quarter. This is a notable improvement compared to the loss of $22.6 million in the same quarter of 2022. The decline in revenue is attributed mainly to the temporary suspension of mining activities at Jerritt Canyon and a slight reduction in production at the San Dimas and La Encantada operations in Mexico, as outlined in the earnings announcement. VinceLanci advocates for a strategic focus on quality when investing in mining companies. He suggests that, in the long term, substantial capital is likely to gravitate towards acquiring quality assets, especially if energy costs remain favorable. Join us as we delve into insights shared by VinceLanci. To stay updated with our latest uploads, be sure to subscribe to our channel and activate notifications. Thank you.
I pulled up a monthly chart just to get a really, 10,000 foot up picture. And I looked at it from a monthly point of view from silver on the left versus the silver junior miners, and start on the side where it has the yellow arrows, that half of it. In 2020, silver made a significant low. So did the junior miners. Fine. In 2021, silver made a significant high. So did the junior miners. Fine. I'm good with that, right? Okay. Then between 2021's high and today, you make a higher low in silver, and then you kind of bounce off of it. And that's the one where we had all the Indian buying coming in last year, right? And then you bounce off of it, and we're in sell season, the end of sell season. I don't know where we are anymore, but I know that we're not in a normal situation. But silver kind of, balances out. Now you go over to the miners between the high of 2021 and the low in silver of 2020, say December 2022, you have a low. But if you look at the last 6 months, the silver junior miner ETF is a new low. It's a new low. So I kind of mark those off a little bit. So if you look over here on the right-hand side, it's like we made a low, and now we made another low that's below this intermediate low. Meanwhile, silver went from here to here. Silver went from $18, give or take, to 22 and change on a bad day. And miners have gone from, $8 to $8, basically. So technically, everyone will tell you this looks sick, right? Technically, that's what everyone will tell you. And it may be sick for another 6 months in general, forgetting the whole seasonality of the metals. But once you know the reason, at least one reason for the selling, and it's because people need money, not because the companies are poorly run, then you make a decision. Am I going to buy this house, or am I going to wait a while? So I'll use technicals if I get in as a trigger, as a tactical thing. But you find a good mining company, once you do that, that's the work that I need to do. Once you do that, you're just like, okay, fine. I don't care about the worst house on the block that's getting hammered. I want the best house on the block. That's getting less hammered. And there's several reasons for that. You don't go shopping for the cheapest buy now. You go shopping for the surest thing. Because when the money comes back into miners, and it will if energy costs stay low, among other reasons, people are going to buy quality first. So the big money is going to come back and buy quality first. Now, yeah, you can buy the little guys and hope they get taken over, right? And there's nothing wrong with that. However, if you're going to hold something for 10 years, you want to buy something that's really good and pretty cheap, as opposed to, I don't know what the heck they do and is really cheap. So that's where I am in my process right now. I hope that helps.
According to strategists at UBS Investment Bank, there is an anticipation that the Federal Reserve will implement a substantial 275 basis points cut in interest rates next year. Lanci provides insight into the challenges of higher interest rates, emphasizing that in such environments, the task of making and maintaining profits becomes more formidable. He particularly highlights the vulnerability of investment vehicles focused on mining, pointing to the potential hurdles, such as redemptions at the end of each quarter, that may intensify as the year progresses. In the realm of specific stocks, Mag Silver is currently in focus with an average one-year price target of $19.42, indicating an impressive upside of 96.33% from its current stock price of $9.89. Lanci adds to this sentiment, asserting that the current juncture presents an opportune moment to invest in silver mining companies. Let's get back to the interview.
But during sell season, you get liquidation of shares for one reason. People want their money back. They may want their money back due to poor fund performance. They may need their money back due to poor performance in another investment, forcing them to liquidate winners to solve the problem. But they need their money back. One thing is certain, in a year where interest rates have climbed to 5.25%, making money is both harder to do and harder to keep. In times like these, good assets get unfairly sold due to financial risk, not business risk. Put another way, the world is too leveraged, and as that leverage shrinks, those with the least amount of actual capital are forced to capitulate. I'm reminded of Warren Buffett's phrase about when the tide goes out, we see who's naked. Anyone invested right now who's not making money is licking their wounds. Some are regrouping, some are exiting. In past years, you would have been able to double down. Money was easy to get. Those days are ending. Money is expensive now. Therefore, you either manage risk or risk manages you. Now, why am I saying this? First off, Goldfix knows a small fund that played gold on the short side, gold futures, got taken out in the rally a couple weeks ago. However, this fund was so small, it was just collateral damage in the rally we had last month, due in no small part to China closing the arb by taking delivery. So we chalked it up to the usual fund blow up. Nothing special. We didn't even report on it. But it came during sell season, or more appropriately, in this fund's case, liquidation season. They were buying as they were covering. If you are an investment vehicle specializing in miners, you have had an even rougher year. This makes you vulnerable to redemptions at the end of every quarter. And that vulnerability grows as the year goes on. So if you're a short bullion player, you're losing money this year. If you're a long mining player, you're losing money this year. And that's what we're going to talk about now. In a capitulation event, which we may be in right now, as investors sell everything not tied down either due to poor performance or a need for a cash infusion, those investments get liquidated before year end. Therefore, this is a good time for investors to consider buying shares of mines in which they already like the business. However, there should be no expectations of a hard and fast rally after this is all done. I want to be a little bit more specific for you now. What you are looking for is a pristine entry into a 10-year hold that will grow over time. This is why you must pick a business whose operations you trust. Liquidations that we're going through right now can certainly continue into the new year. And as rates stay high, you can also see these company stocks continue to languish. But the price of the stock is not the business. If you trust the management, you start to buy the company. Now, why am I saying all this? I'm not a mining person. I am a stock person now. I have been told by two independent sources that an investment entity, well, that two investment entities in the precious metal space may be getting hit with large redemptions. My own reconnaissance after this suggests it's true. These are relatively small funds, but if a small one is getting redemptions right now, you can bet a larger one has also been getting at least some redemptions. There is a possible capitulation moment coming. It may have already come, but this could be one of those generational opportunities that the kids like to talk about.
What strategic considerations should investors consider as they navigate the intricate interplay between monetary policy shifts and sector-specific dynamics, especially in light of VinceLanci's emphasis on the challenges posed by higher interest rates and the unique vulnerabilities of mining-focused investment vehicles? If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.